Take the strongest economic growth in 6 years, add a dash of low inflation, and you've got a recipe for a rising stock market, which is just what the Dow Jones Industrial Average did today, gaining almost 20 points to another record. Good evening, I'm Paul Kangas.
And I'm Cassie Seifert. In corporate news, Aetna announced a major restructuring today, and Bank America has made another big acquisition, Chicago's Continental Bank.
NBR is made possible by Digital, an information technology company putting imagination to work. Franklin Funds and Templeton Worldwide form the $90 billion Franklin Templeton Group, a global alliance of mutual funds distributed by investment professionals to over 3 million shareholders. A.G. Edwards, member of the New York Stock Exchange, serving the investment needs of individuals and businesses through more than 400 offices nationwide, and is produced in association with Reuters, the world's largest electronic publisher, which provides NBR with news, market data, and communication services worldwide.
Aetna Life and Casualty said today it's eliminating some of its underperforming annuity and investment products, cutting 4,000 employees in an effort to improve profitability. The insurer will take a $1 billion charge against fourth quarter earnings to pay for the restructuring. Aetna executives say the company expects to report a 1993 profit of about $600 million, moderately above expectations. And they say there could be even more layoffs following a comprehensive review. Aetna stock gained 1 5/8 today to 59 3/4.
San Francisco-based Bank America, the nation's second largest bank, announced today it has agreed to acquire Chicago's Continental Bank. That will create a close rival to number 1, Citicorp. Continental stock was the most active in New York trading today, jumping more than 6 points, while Bank America lost 3/8 of a point. Diane Estabrook reports from Chicago.
The $1.9 billion marriage of Bank America and Continental Bank was sealed 2 days ago. Under the deal, Bank America acquires Continental Bank for 21.25 million shares of Bank America common stock and $939 million in cash. Bank America will later buy back $500 million of its common stock, so existing stockholder shares won't be diluted.
This deal came together because it's a remarkable opportunity for Continental to serve its customers better.
By acquiring Continental Bank, Bank America adds $10 to $12 billion to its assets. In the mid-'80s, Continental was rescued from the brink of failure and got out of the retail banking business, focusing exclusively on corporate banking. By merging with Chicago's second largest bank, Bank America doubles its wholesale banking business.
The Midwest is particularly strong area for wholesale banking. As a matter of fact, Chicago is the second to New York City in leading areas of corporate business. And we identified the Midwest as a strategic objective for us in the wholesale business some time ago with our board.
The merger will eliminate between 500 and 800 full-time jobs. Continental will be renamed Bank of America Illinois and be the wholesale banking headquarters for the company. Analysts say Bank America moved at the right time.
Our feeling was that as the year went on here in 1994, loans would start to grow faster, the demand for corporate banking services would accelerate, and our feeling was that Continental Bank's earnings were about to accelerate as well.
Continental CEO Tom Theobald will leave the company after the merger, which still needs regulator approval. Bank America expects the final deal to be sealed sometime during the third quarter of this year. Diane Estabrook, NBR, Chicago.
The economy surged during the last 3 months of 1993, according to the latest figures out on the nation's output. America's gross domestic product grew at an annual rate of 5.9%, much stronger than the 2.9% reported in the previous quarter. And inflation barely showed up on the meter. Dennis Moore reports.
There were some special effects in these GDP numbers. Automakers trying to make up for slow third quarter production may have added 1.5 points to the growth rate, for example, but it wasn't just a lot of industrial light and magic.
The expansion was broad-based. It was led by interest-sensitive spending. The report suggests the economy is squarely on a path of sustainable growth.
The assembly lines may slow a bit in the first quarter of '94. The hammering of the housing boom may abate a bit, but forecasters don't expect the economy to hit the wall as it did early last year.
And what we've got going for it right now that we didn't have in 1993 and in 1992 is the power that's supplied by accelerations in both business and consumer confidence.
And what we've also got going is an acceleration in investor confidence based on the near disappearance of inflation.
The inflation news is fundamentally good, and it's going to continue to be quite good.
The decline in home mortgage rates, says Lee, hasn't yet shown up in the Consumer Price Index because of its statistical peculiarities. Political pressure from the healthcare reform debate should keep price increases low there. And weak economies abroad will mean plenty of import competition to keep domestic price increases in check.
So you look at those three areas, and you're looking at over half the Consumer Price Index, where the surprises are likely to be on the downside rather than the upside.
And that doesn't give the Fed much reason to raise interest rates, but some think the markets are hoping for a deterrent or preemptive strike, say a quarter or half a point before April's over.
My guess is that if the Fed acts soon enough, that the long bond yield will go lower than its low on October 15th when it was 5.78%.
And Fed watchers will be glued to their TVs Monday morning when Alan Greenspan appears on Capitol Hill for the first time in 7 months. Dennis Moore, NBR, Washington.
Following through on yesterday's 18.25 point gain on the Dow Industrial Average, which lifted it to its 10th record high of the year so far, the Dow jumped another 21 points to the 3947 level by 10 this morning, while the market overall was very strong, with 11 stocks up for every 6 down. The impressive rally was, of course, largely in reaction to the good news of that robust 5.9% fourth quarter GDP growth, accompanied by less than 2% inflation. After a minor mid-session pullback, stocks came on strong again in early afternoon with the added help of higher bond prices. And throughout the afternoon, the market in general held its gains well, and so did the Dow Industrial Average, which went on to close with a gain of 19.13 points at 3945.43. Its 11th record high of the year. For the week overall, the Dow rose almost 31 points. Today, we ended about 8 points below the best level achieved, with up 17.75 points from the low of the session. Trading volume, not that impressive, though. 314.4 million shares. Thought I'd never say that wasn't impressive, but compared to yesterday, it wasn't. We see almost 100 million more shares of up volume than down volume. The transport index rising just over 13.5 points, but the utilities, after 2 big days of gains, down 0.19. The closing ticked modestly bullish, plus 189. Standard & Poor's 500, 100, and 400 mid-cap, all record highs with better than 1 point gains. The Commodity Research Bureau index was down 0.03. The New York Stock Exchange index up just over a point to a record. The value line up 1.70 at a record, and the very broadly based Wilshire 5000 at a record with that gain of nearly 20.5 points. The bond market had a good day on the upside as investors looked past the last year's stronger than expected economic growth in the fourth quarter and focused on the low rate of inflation, which could keep the Federal Reserve from even thinking about tightening interest rates over the near term. A steady Fed funds rate today at the low end of the perceived range was another positive, which helped tax-free and corporate issues close up about half point on average. Longer-term governments were up about 5/8 of a point, not quite that much for the long Treasury, 19/32 in the plus column. Lehman Brothers long bond index up nearly 8 points, nice move there, and Fed funds edged up a bit from yesterday to close at 3 1/16. Later, I'll show you where the action was on Wall Street today. Cassie.
Japanese Prime Minister Hosokawa reached agreement with the opposition party on a political reform package today. In the last couple of weeks, political uncertainty has overshadowed economic worries in Japan. But analysts say Hosokawa can now focus on leading the country out of recession and dealing with U.S.-Japanese trade issues. Lucy Kraft reports from Tokyo.
Hours before a Saturday deadline, Prime Minister Hosokawa's sinking fortunes seemed to revive when he and opposition leader Yohei Kono forged a last-minute agreement on political reform. The new accord, among other things, permits limited corporate contributions to politicians. Hosokawa originally had sought to outlaw such contributions altogether. The compromise package still needs to be approved by the Parliament on Saturday, but if political reform is resolved, it will free the government to focus on other pressing issues, especially the economy. That should cheer up Japanese investors desperate for Hosokawa to start tackling Japan's worst post-war recession.